course, I'm here to share with you about my stock account. So in my account today, United Natural Gas made a gain of 3.64% to 7.11 as the market continues to worry about the rising interest rates, and SQQ made a loss of 0.01% to 19.43. So right now in my account, the net asset of my account is 68,222.48. The market closed mixed today. Dow Jones Industrial Average closed up 0.62%, Nasdaq Composite closed up 0.18%, and S&P 500 closed up 0.24%. Internet content and consumer electronics closed out with a loss of more than 1% today, as the Nasdaq adjusts its weight on the heavy internet companies, whereas credit services and the software application closed up more than 1% today. The weight of the 6 technology giants exceeded 50% in Nasdaq 100, so Nasdaq intends to adjust the proportions to make sure the price, the index, is independent from the heavy influence of a few companies. It's a seemingly unstoppable trend of market capitalization growth in big tech stocks, such as Apple and Microsoft, means that they've reached the upper limit for the Nasdaq 100 constituents. Thus, it announced a special rebalance measure, and that would redistribute the weight of index constituents. According to the statement released by company on Friday, the index provider said the July 24th adjustment will address the problem of excessive concentration of index holdings by redistributing weights, with more details released later this week. Nasdaq's surprising move is as a result of the continued expansion of the share price and market capitalization of the tech giants. And this epic rally in the tech stocks have contributed to almost all of the gains of the entire US stocks market in 2023. Fueled by extreme optimism about artificial intelligence, the strong share price performance has sparked a fierce bullish short debate on Wall Street about whether this top-heavy growth trend can continue. Some Wall Street analysts believe that the rally led by big tech stocks will extend to broader sectors of US stocks, while opponents believe that the high valuation tech giants may have a dot-com bubble burst, similar to the one in late 1999. In my opinion, this is a good thing, because it reduces the risk of overconcentration of these participants, said Todd Song, managing director of ETF and technology strategy at Strategas Securities, said. On the other hand, it increases the weight of distribution of other parts of the index, what I like to call the bench, continuing to improve and strengthen the index. With the details of this action have been reviewed very little, a paper on Nasdaq website said that in some cases, special rebalancing measures can be called upon when the shares represented by the largest constituents of index exceeded the present threshold. In one case, the combined influence of the company with the largest weighting exceeds 48%, the document said. This was the case with July 3rd, with Microsoft, Apple, Alphabet, Nvidia, and Amazon and Tesla. The total weight of these companies reached 50.9%. Nasdaq's methodology can reduce it to 40%. Cameron Leha, Vice President and Global Head of Index Product and Operations at Nasdaq, said, the rebalancing is designed to help fund managers who are linked or benchmarked to the Nasdaq 100 to comply with decentralized rule by the U.S. Securities and Exchange Commission, SEC. The total weight of the largest holdings, 5% or more, held by index is limited to 50%. Big tech stocks mostly fell Monday, with shares of Google's parent company Alphabet and Amazon falling more than 2%. The conventional traditional version of the Nasdaq 100 index performed flat, while the equal-weighted version of the Nasdaq 100 index, which excludes market capitalization weighting bias, rose by 1.8%. This is a huge reversal from the previous 6 months, when the equal-weight index lagged behind 18% points. Alan Rosen, head of institutional equity derivatives from Wall Street investment firm Oppenheimer and Corporation, said, "Big tech stocks underperformed today in the trading day follow an announcement of the rebalancing policy. They've been hit relatively hard because we've seen money flows elsewhere. If the influence of big tech stocks is curtailed by the Nasdaq, blockbuster index tracing ETFs such as Invesco QQQ Trust will need to adjust their holdings accordingly. But the balancing strategy itself is unlikely to have a profound impact on the future performance of the Nasdaq 100. Tech giants such as Apple, Microsoft, and Amazon will remain overwhelmingly dominant in the index, matching their combined 13-figure market capital size, with a weight similar to their levels at different times in the past year." That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.